Good morning, everyone. This is Brad Matheny. Today's the 4th of June. Happy Wednesday. You know, the old lump day, let's call it. Don't want to get in trouble here on TradingView. But, the markets are doing everything in their power right now to try to break above this top. It's almost as if the markets are sitting here trying to prove me wrong where my expectations have been for a breakdown. But wrong or right, it's all about trying to help you guys. And I get some great compliments about how viewers love my videos because I try to be very factual based about what's going on. So now remember, I focus mostly on daily charts, sometimes going down to hourly, trying to tell you guys where the markets are likely to go. And I've been working on more resources for everybody. I'm trying to put together a guide to trading, which right now is a little under 100 pages with lots of examples and how-tos and what have you. But the whole idea here is to teach you how to use these tools, price action mostly, to become better skilled at understanding what price is doing. So let's take a look at this from a standpoint real quickly of highs and lows, Fibonacci price theory, and kind of what's going on. So we come over here, you can obviously see we're in this rally phase, right? We've been in this rally phase in between this red line here and this red line over here in this flagging mode for many, many weeks. We had gapped up into this island formation. We come back down in this area, rejected off of this low. This is what is called classic rejection right there. Off of that low, back to the upside. And now we're looking at this high to see if we get rejection today off of this high. So there's our move above that high. And get rid of that thing. And now if we get rejection off of this high, it's going to be known today or tomorrow with a rolling type of a top pattern. So if we get rejection, it'll come up, it'll stall, and it'll move right back down. That would be rejection. Just like we had right here. Moved down below that low, opened, and then rejected back to the upside. So if we get rejection here, then we're going to look at this 575, 576 area as a potential target to the downside. If we do not get rejection over the next day or two or three, because it can take some time to roll over, then we're looking at a move back up here to this 614, 615, 616 area. So let's be very honest. We are still bullish, okay? We do not have confirmation of this breakdown yet. We are still bullish. Should have just grabbed this one. General trending is still bullish. We are not in a downtrend yet. We have broken out of this standard deviation channel, which you can see if I carry this forward, has now moved a bit downward. So typically we would go to the highest point, which is this point here yesterday. You can see now that the standard deviation channel has shifted slightly. We're still kind of in that channel. If we were to go back here to this point, you can see that we're slightly outside of the standard deviation channel. So understand that depending on how you want to look at this, we are definitely in sideways consolidated trading right now. And we are trying to determine, like I said, if we're going to get above or below this rejection level here of 595.62. So we're currently trading at 595.93, down just a little bit. We're looking at potential rejection here back to the downside. We will see. But as I mentioned to you, this market just really wants to, tease me and say, hey, Brad, I'm not ready to roll over yet. So we'll see what happens. But again, this rolling sideways trend Getting above this upper resistance area at 595, 50, 60 roughly would be a good sign for a move up here to 513, 515, continuing this bullish channel. A breakdown rejection at this point back down to the downside would set us back up for a rolling trend back down to 575. So remember, this is our rejection area here. And this is our bullish rejection area here. So we've got a fairly clear window here. It's what the same window I've been pretty much talking to you about. I included it down to the gap area here. That's what this rectangle is about. That's the gap window that I think is playing out right now. Whereas the core window that is actual price is basically from this low up to this high, carrying over. These are the Fibonacci ranges based on daily data. We have a little Fibonacci high right here that's recently been broken, so we are seeing a little more upward trending potential. If we were to roll down and take out this low, this 583.11 low on a daily basis, we would move down into a very tight low channel trying to break down below this 576.62. So we need to kind of see how this plays out, and let let the markets figure it out on their own. So we are still looking at that 597, 598 top to break away. We're close. We're not there yet, and we're looking for this 575, 576 breakdown low. Like I said, my estimate is that we're going to move into that July low. This would almost be a perfect time for that move to set up. But again, we shall see what happens. The markets, like I said, tend to do what they want to do. And, believe it or not, the Trump economy with his tax cuts and such should be generally pretty good for the markets. Now, remember, we still have these ultimate highs and lows. Back over here, call it 614, 613 and a half. Just call it 614 roughly. And then down here at these ultimate lows, which are 482 and change. So until we're out of that window, we're still in this big, broad consolidation phase. And, anything can happen. We could rally right on up into this area or higher, setting up a new high, or we could break down all the way down into this lower channel, and that would all still be valid as far as Fibonacci price theory. This little rolling sideways gapping window right here is really, playing out as a consolidated sideways range. That's what we're dealing with right now, is a pretty solid sideways range, and we're going to see if and how that move holds up today. I mean, we're really up at that high. We could get a little higher. Remember, could come all the way up at 605, 606, even 610, and then roll over. But, we'll see how it plays out. Right now, we're generally bullish. Remember, that's the general order of things. We are in this uptrend until we either break down or break above this upper level, this red level right here. Call it 614. And in fact, I'll put this up here. And that's the general structure of the market. Until we get that breakdown, we're generally bullish, should be looking for upward trends, and we're looking for a potential top over in this area near the 570, 597 to 598 area. And if we get the breakdown below 575, 576, then we are short, looking for a downtrend. That's a breakdown, a sufficient breakdown in this area, 576, 575. Yeah, that's a fairly sufficient breakdown to indicate a downward trend is starting to take place. Okay, the cycle pattern for today is a carryover. In carryover mode, we are in bullish explosive trending, bearish daily bias, bullish weekly bias. That would align fairly solidly with a potential upward trend today, unless we get some really weird news. Let's come over and see what kind of news we get today. We have PMI coming up. We have ISM manufacturing, non-manufacturing business activity. We have oil refineries and the beige book. That's about it. Pretty quiet day. The ISM number could be pretty big, and PMI could be pretty big. We'll see. It's expecting to come in, it looks like, at 52. Let me see here. Yeah, forecast. So it's expecting to come in a little higher at 52. We'll see how it comes in, and we'll see what kind of data we get today. Okay, so that's it here for the SPY. We will come over now to gold and silver. Gold and silver have moved into my rally phase. We didn't get much of a move yesterday, but boy, did we get one on Sunday, Monday. That was a big move over the weekend. We are in a rally phase, bullish in carryover trend. Then we get the rally phase in counter trend mode. Then we get a blank day on Friday. We do get a temporary bottom in counter trend mode on Tuesday the 10th. Gap stall, revert flush, breakdown in trend mode, then breakaway. So, looking for that follow through in gold and silver. Here's the big rally. You can see right here the big rally coming up. Almost $35 in silver, stalling out, kind of flagging. You can see we're setting up kind of a flag formation across here. Spread this out. Assuming these lows hold. Getting close to a flag apex. Same thing kind of over here with silver, with gold. Getting close to a flag apex coming across here. And we would have to carry it across here. So we could get a flagging apex type of a mode set up here with a potential breakout. That would be tomorrow, late tonight, 2100 tonight, and that would be 1900 tonight. So that sets up around the same time frame, possibly setting up kind of a apexing breakaway zone right in this area, and we'll see how that plays out. The big upward trend here in metals has played out fairly strongly, and I'd like to see this continue, but I don't control the markets, neither do you. I just think that gold and silver are extremely undervalued considering the risks in the market still. I think gold needs to make a move up above 4,200 to really offset some of the risks involved in the markets right now. But we shall see how this plays out. I do like this breakaway move. I do need to see it continue to the upside in order to expand up above that 37 to 3,900 area. That would put silver possibly up in the 36, 37 area, maybe 40. Ultimately, I think silver is going to go up to 44, 45 this year, and I think gold's going to go up to around 42, 4,300 this year. So we'll see how it plays out. Right now, getting into that flagging formation, looking for some support and then some potential volatility. Remember, as we get close to these apex levels, you can see here up, down, up potentially. But as we get close to these apex levels, we can get some volatility. Same thing here, up, down, up. Should head higher, but as we get close to these apex volatility modes, you could get some real volatility, throwing metals into a wild, coiled apex mode. So we'll see how it plays out. All right, Bitcoin. moving over into that consolidated downward kind of a mode. We're down 430 right now. We don't have a big breakdown. Not yet. Interesting to see if my topping pattern sets up. We are getting, fairly moderate volume. We are still in that upward trend. Well, actually, based on my lines here, we've kind of broken out of that upward channel. You can see here, come to here, come to the highest point. Yeah, okay, so come to this high point. Come over here. Yeah, well, no matter where I'm at in this roll, we've kind of broken this channel. And that would lead me to think that we are in some sort of a breakdown mode. So understand that, but until we get, oops, until we get below this 103 level, we don't quite have that confirmation of a breakdown yet. We're in the what's called the cradle pattern, which I've drawn here in green. I'll change it to blue. So that blue cradle pattern is what is driving potentially this trend yet. And we could reject at this 103 level, 102, 750, trying to move down. In my opinion, though, it looks like we are trying to move down. We are trying to roll lower. And like I said, that to me is the real news for Bitcoin. I think we are attempting to break into that breakdown mode. And again, simple target would be right down in this area. That would be the very simple Fibonacci target level based on my research. Oh, I'm drawing all over the place. So it's real simple. It's just using these Fibonacci trigger levels and then finding the next one lower. And that's basically drawn from this low up to this high. If we fail at this point and break down, then this next level would probably be, a real easy target. So you also have this 50% level here. Try to draw a decent line. You have that level. And you have this lower level at 618 as another target. So these, that puts us at 93 to potentially 88 to potentially 82, 80, 81, 82 to the downside if we get this breakdown. And this breakdown would set up perfectly with my May 20th call that Bitcoin is rolling into a double topping formation, just like I suggested in that video. Very similar to back over here, setting up this kind of a double topping and rolling into a very solid, potentially 65 to 75% downtrend. So there's our 75% downtrend. If this rolls, we could roll into this potential 70, 75% downtrend. So understand, it really just deals with how low do we go. There's 80%, there's 60 some. I kind of think if we do fall, a fairly common 61% number would be realistic, and that puts a target right around 41K. So we'll see. All right, don't want to be too long. Go get some today. Happy lump day, let's call it. And let's see if the market does anything more than just trade sideways today. All right, guys, go get some.